So we are basically nearing end of the sort of session, right? Today is actually the last session that we are planning to conduct. And as I mentioned you in last week, so we plan to do some past paper questions during next 3 weeks, right? So up until 7th November. So they plan to start revision classes mid-November up to I suppose mid-December. So you have already got the revision timetables. So as I told you on the other day, so you need not to come for revision classes on development financing, so which I think it's not kind of waste of kind of a time, since we have done everything requiring for the examination. So what you could do it from today onwards is you can revise the content, and you can start attempting the past paper questions way back from even 2014 onwards, because so everything has been now given free, right? So number two, I think you need not to apply, or you need to pay exam fees again, whoever who have already paid, which is valid for the January examinations. And as I told you on the other day, if some of your friends have not already applied for the examinations, please ask them to do so, right? I think still there may be a chance of accepting the examination, the request, but ask them to double check with the examination department and do apply for the exams, because now apparently now for this year also we have only one more exam, that is from 2021 January, for I mean to say 2022 January. So that's to cover 2021. So maybe there may be another examination cycle in 2022. But if since that we have time to go and we have some time to preparation, so let them to apply it again, right? So before starting today's session, so any questions, any thoughts, any views, right? So any feedback on what we have done so far? Please have your thoughts, if anything.
So what we have done, previously we did that 10 questions, multiple choice questions. If we can go further like that, will be much great, I guess, because we can gain much of a knowledge while you're explaining the stuff for others.
Right.
I think so.
Right. Good point. So probably, so we can, do that kind of thing, because actually today that I'm planning to do a bit of the last session, and after that it's all up to the past paper question. So we have 3 more days to go. So let's select in a suitable manner. The questions could be selected suitable manner, so that maximum benefit been with you. So that's what my plan. So good point. So any other? Right. So then what you could is we try to start today's session. Right. Today's basically we try to understand non-performing loans, project monitoring, rehabilitation, sick business units kind of thing. So what exactly this means is, right? So now if you think in today's context, right, uh, yes, you can give credit facilities to clients, right? But when you are trying to recover them, may not be easy, right? Why I'm telling that, due to various circumstances, now we have found recovering of credit is not easy, right? So there is a saying which is not exactly applicable. It says any person can, like any fool that they say can lend the money, but only wise men can collect it, right? So what it, I mean, if we set aside the whatever the words, but what it says collecting money or recovering money is not a easy task. That's what it says, because you may see it what's happening in these days also, right? So many difficulties faced by banks, financial institutions in recovering money. It could be due to man-made this thing. So it could be due to natural disaster sort of thing. But whatever said and done, some difficulties we see in recovering. So especially when come to the project financing, it's a bit critical or very important. Why I am telling is, not like normal loans, in project financing, it is further difficult to, monitor or recover. Why? Everything starting from the scratch. The project, in project financing, you are trying to start everything from the beginning, and then you try to develop. But in case if something happened to a project, then we are in a difficult situation to collect it, because not like normal loans, the project may have not come to the required level to generate adequate income. So that's generally how we see and how we find in project recovery. So before that, so what we're trying to understand is, we try to understand some initial concepts, right? So what is this bad loan and NPL, right? What are the reasons? Those things we try to learn, because it may be necessary in a large picture to understand so those things before exactly moving to the SIG project and rehabilitations. So generally we have some on-balance sheet and off-balance sheet facilities. I think what is on-balance sheet is basically which is recorded in the balance sheet, and off-balance sheet which is recorded off in the balance sheet, right? That's how the on and off idea. So why I want to put here is, and if you go and see some past paper questions, you can see there are occasions they have asked about what is on balance sheet facilities, what is off balance sheet facilities. So to that extent they have questions. So if we know these things, it's not easy, it is easy for us to score some marks. So that's why I wanted to put this here, right? And then just as I was telling this, but better you get an idea what are those steps. When move to the some other definitions, who is borrower, what is performing loan, what is non-performing loan, I have given here. Like especially in going forward, from January onwards, now this NPL direction, right? It's going to move out. Instead, the impairment will be in operations. But still, for this examination cycle, so we need to understand the what is NPL, and so kind of definitions. That's why we did this type of thing for even for the credit management. But for the time being, we need to know what is NPL and how classify and reclassify kind of thing. From January onwards, these things going to be changed. Especially when you say performing and non-performing. Non-performing is basically as per the section 46A, right? As per the Banking Act, right? It says, facilities falling beyond 90 days or more. So I will show you exactly what the kind of definitions, what are the type of products. So then we taken them as non-performing. Like if the, say, OD facility moving beyond 90 days or more, if the outstanding is not paid, we'll say OD is NPL. Say credit facility from the due dates, there are 3 payments are not forthcoming, then we'll say it's NPL. Like that, there may be some definitions to understand what is a non-performing criteria. So based on that, so you can define NPLs product-wise. And if you understand what are the NPLs, then it is easy for us to understand what is the performing. If anything is not NPL, non-performing, so it could be performing. So that's simple as that. Okay. Then we move to these are some exemptions also. Like when you say the facilities fall into NPL, right? Some exemptions are there. So what are those? Facilities against cash deposits, right? So if you have given a facility, OD, term loan, or whatever facility against cash collateral, then no need to keep the the exposure beyond 90 or beyond 180. Why? So you can easily uplift and settle it. Hence, the facilities against cash, so we are not treating as non-performing like that. So there may be some occasions, right? So how it has been doing is explained here. So basically, facilities against cash will not be NPL. So any other facility that you can come to your mind which can be not NPL? What type of securities? What about the pawning advances? Have we come across many facilities classifying as pawning NPL? Have we? Or have we not? Any thoughts? Pawning also very rare possibility classifying as NPL. Why? Because pawning, so we give for 1 year. So if within the 1 year, so we need to re-grant or as a other facility. If not, we go to an auction and get it settle the exposure. So very limited the scenarios we see those being classified as NPL. So which mainly if the asset is strong, right? If the collateral is strong, so there may be less likelihood those facilities being classified as NPL, like cash or near cash. But rest anyway, you need to classify NPL as per the central bank direction. So just for your understanding, so what is NPL? What are the NPL facilities? What are the facilities which are not classified or exempted grade facilities, right? And what act that you consider the NPL being classified. So those things we just learn it, because some occasions we have seen, right? We have seen that being, the questions has been raised to that extent, right? So this is again not very much relevant to development financing, but it's good that we know these things for at least MCQ questions. But credit management, obviously they are asking this type of thing, but development financing is very limited. But these type of the initial definitions we need to know. This tells us how exactly a facility being identified as NPL. So that's what definitions are. OD, there are two types of ODs. One is you have approved a permanent limit and offered to a customer, we call permanent overdraft. And the other is a casual, where there is no limit and in a current account, so you give some advance to a client. That's how the overdraft. So in overdraft, right, there are two scenarios. If you have given excess on a current account and the balance is remained 90 or more, continuously remained as 90 days or more, that could be a NPL triggering point. If the client has been offered a POD facility and the balance of the POD facility is over and above the limit for 90 days or more, then again it's NPL. Point B is if the client has several current accounts with OD limits and then whatever the balances above those limits together will be taken as the what is the NPL amount. Right? So if the client is falling NPL in one facility and whatever the amount above the limit, and then there may be some other OD we have granted, so you collectively taken this is the NPL exposure. So there are some exceptions to that in some cases where if the customer's total exposure, let's say 100, several facilities, right? So out of that, several facilities now moved beyond this 90-day requirement. So not only OD, say other facilities also, here that they are taking about only OD, no? So collectively, the exposure of those facilities is exceeding 30%, then total customer will be classified as non-performing customer, right? So that is we call 30% rule also. I am not, taking those thing here because now it's, as I was telling, it's very much relevant to credit management, but not mainly to the development financing. But since that, just wanted to highlight, like, when you say customer NPL, if the customer is at one facility, then as per these definitions. If the customer has many facilities, yes, first we go by this definition, and then we will see what are the exposure of those facilities as against the total exposure. මම කියන්නේ දැන් අපි තුන් facilities පහක් තියෙනවා, දෙකක් NPL criteria එක යන, තුනක් performing තියෙනවා. හැබැයි අර දෙකේ exposure එක facilities පහේ exposure එකට දෙක බැලුවම 100% වඩා වැඩි නම් ඒ පහම අපි NPL කියලා classify කරනවා. That's what I was telling. ඒක තේරුණාද බලන්න? What I meant first, because it's not here, because it's just a kind of value addition that I have shared here. Okay. Then we move to the credit facilities, point number 2 here. Repayable in monthly installments, like installment loans. So from the due dates, if the client is not going to pay for 3 consecutive installments, it means, say, January 1st is the first installment due. Then you are not going to pay. Then you have to February 1st, and you have March 1st. So there are 3 installments. Technically, if number of days, it's something 60, because January end, February end. If you are not going to pay the February end when the 1st of March means NPL. So 60 days in tenor, installments, 3 installments. So if the facility is being paid month on month and the client is not going to pay the same for consecutive 3 months, then we have an issue being classified as NPL. That's category number 2. Then there may be some other categories where you have given short-term loans to client, and he may not be servicing the installments or the due amounts quarterly or biannually as specified. And if he's not going to do that, then from that point onwards, we allow another 90 days. Okay. Say you give a short-term loan to a customer, right? It's a vehicle importer, for example. LC retired to an import loan, and import loan to be paid, say, 31st of March. So 90-day or 120-day STL. So this person is not going to pay on 31st March. And there's another 90 days you allow, April, May, June. By June 30th, the facility could be classified as NPL. Why? Short-term revolving loans from the due date, 90 days or more NPL. Then credit facilities on one installment, maybe together with capital interest, like we call bullet loans. So give it today, you allow the client It's a period of 6 months, 1 year, and after 1 year, he has to pay capital interest together, or maybe capital at the end of the first year. If you're not going to pay, then you allow another 90 days, and then we classify as NPL. Then credit card, again from the due date, like the minimum amount that sometimes you can see that you're supposed to pay. And if it is not paid for 90 days, that could be classified as NPL. Right? So basically, there is a classification methodology for credit facilities when they are in arrears category. So as per 46A, section 46A Act, Banking Act, describe how facilities could be performing and non-performing. So for us to get an idea, we need to know what is Act, a criteria, how the facility can be classified as NPL, under what circumstances the facilities could be exempted, not being NPL. So far we know that. Right. Any questions? Because this slide is important in case for MCQ, right? If the examiner asks how overdraft facility could be classified as NPL, how installment could be classified as NPL, could be 1, 2, 3, 4, or maybe a one-line answer. So you need to know that, right? You know how to classify. Now you know what are the exempted facilities, and then reclassification also important, right? Once you classify them as NPL, it may not be kept for a longer period, right? Depending on your recovery efforts, you have a chance of, revisiting the status. So how we are going to pay that? The first one, if the client is going to pay total arrears amount, interest and principal, fully, reclassify. You can NPL එකක් කියලා ගිහිල්ලා දැන් මාස 6ක් 7ක් යන NPL එකක් තියෙනවා, customer negotiates with you and he's ready to pay total arrears of interest and capital. So reclassify to performing. That's fine. Then there are some occasions you reschedule, restructure, realign. So there are, you can name it, means that say client NPL, you offer a revised payment plan under different terms and conditions. That could be due to, again, issues faced by the client or issues which is not under the control of the client. Whatever said and done, you offer the reschedulement. So based on the timing of the reschedulement, you allow the client to perform, pay regularly. And after the specified period, you reclassify them to performance. That's about the rescheduled facility. So we'll see how that, exactly the reclassification done for rescheduled credits, right? So those are additional actually. I haven't seen questions being given under this section, but just for your understanding, because now since that we are trying to, do in a more methodical manner, it's good that you know how to classify, what are the exemptions, the definitions, the product, reclassification. So just for your understanding. If you have anything, yes, please, stop me and ask the question, right? This is what exactly the reclassification method is. If, you classify as NPL and not stopping that, you further subclassify those advances depending on the tenor as special mention, substandard and doubtful loss. Say OD, after 90 days NPL. So from 90 to 180, we call special mention. 180 to 360, we call substandard. So 360 to 540, we call doubtful. 500 and 540 and above, we call them loss category. That is for more control follow-up practices. So we subclassify the NPL credits. එහෙම කරපු ටිකක් තමයි මේ පැත්තේ තියෙන්නේ. So when you want to reschedule those credits, when they are in these subsections, segments, then the upgradation, reclassification to performing is happening in this way. Suppose the client in a special mention category. So once you reschedule it, you can, do it after 90 days. How? First repayment of interest and capital being repaid under the rescheduled terms and subsequent regular payments. Say, first payment එක ගෙවලා ඔයාට 90 days වලින් ආපහු perform කරන්න පුළුවන් subject to ඒ කාල සීමාව තුල interest capital හරියට pay කරන්න ඕන. Simple as that. So exactly after the reschedulement, you need to wait 3 months for exact repayments. If it is a substandard and doubtful, so again, interest capital to be regular, by 180 days you are in observation. In loss category, you need to wait 360 days. Right? So basically, what this tells about, because as per the Act, they, allows us to reclassify. But the reclassification to be done mainly on the improvement of the repayments. Right? So based on that improvement, you can reclassify. So what basically we are trying to understand here is, as per the central bank, right? There is a chance being given to banks and institutions to treat the bad credit in a systematic manner. So it says, what are the facilities on balance sheet, off balance sheet? What are the performing, non-performing facilities? What is the Act govern those non-performing, performing advances? And how you treat them as non-performing, product-wise non-performing? What are the exempted credit facilities? How are we going to reclassify them? Right? Once the reclassification, criteria has been now given, has been learned. Any questions up to now? Because I just want to share those things before we are moving to understand more SIG businesses. In the context of project financing, it's good to know what is good loan, bad loan in terms of regulation. That's what we did. Any questions? No? Okay, so let's move on. Now we are trying to understand SIG business. Now generally, we know in project financing, so we are trying to finance the client's requirement after evaluating several feasibilities, which we learned last week. Financial, technical, marketing, management, legal. There are so many feasibilities, viabilities. So based on that, we'll say, yeah, we are happy with that. So we see this unit, could perform in future as per our, understanding, as per our analysis. So that's fine. But somewhere down the line, there may be a chance, there may be occasion where a client, right, where a promoter cannot service the debt obtained from a bank. So how you are going to judge that? How are you going to understand that, identify that? So that is called a unit which fails to generate internal surpluses on a continuing basis and depends for its survival on frequent infusion of external capital. So that situation we identify as a sick business, right? A unit which fails to generate internal surpluses on a continuing basis and depends for its survival on frequent infusion of external capital, right? So let's say what exact requirement is when you are running a project, when you are running a business, you need to generate cash inflows, cash outflows. Inflows should be more than outflows. So that's why we say profits. That's why we say surplus. That's to be there to run the company by to attending day-to-day activities, and also it's required to go for the further investment requirements. So if the unit is going to fail internal surpluses on a continuing basis, then we see we have a problem. So what are the attributes? What are the identification signs? First one could be company unable to pay its debts when it's going to due, like earlier NPL definitions. So there may be monthly, there may be quarterly, there may be biannually, right? Maybe interest payments, capital payments. The company, the unit, the project should pay those things. But if they are unable to pay, so means that we have a problem, right? So unable to pay its debts as they become due in normal course of business, we say it's sick signal. Then value of the company's liabilities are greater than that of the liabilities and equity, right? So basically, if you see that you have to pay more creditors, you have to pay more bank lease creditors, and then as against your rest of the liabilities and equities, right? Rather, you see that you are in a problematic situation because now no cash to pay. In terms of equity is now deteriorating because now liabilities are paid mainly through not operating cash flows, through equity also, right? So basically there may be, in other words, asset liability mismatch. Assets could be there but could not be used adequately to generate income to service the debt. Or assets may be there but it's not valuable. Say stocks there, but the value of the stocks is degrading, deteriorating. Then no point of talking about servicing liabilities. Then your net worth could come down. Why? Net worth could be used to service your debt sometimes. Retained earnings could be used to service your debts, so means that some problems could be seen. So that is important for us to understand a company doing well or not doing well. This is an example for a balance sheet of a sick business unit, right? Just understand. So this is again important. Why? Sometimes, rather than going by the definition, sometimes, examiner would ask us, what is sick unit? What is sick business? What are the features of the sick business? If you know this, it is very easy to describe. Assets වලට මොකද වෙන්නේ? Liabilities වලට මොකද වෙන්නේ? Equity වලට මොකද වෙන්නේ? එහෙම නැත්නම් current assets වලට මොකද වෙන්නේ කියලා ලියනවා කියන්නේම we are trying to describe the features. That's what we need, right? Sick business is where continuous basis internal surpluses are not adequate to company to run on continuing basis. Right? එතකොට හැම වෙලේම you need to get those things from outside capital instead of internal surpluses. That's a high level definition. For understanding purposes, yes, this is very good slide. We check one or two out of them. Let's say in terms of current liabilities, short-term borrowing should be high. That's a signal, because you go for OD, you go for excesses, and you go for short-term borrowings to finance your assets, right? Because now whatever the assets not generating adequate income, so possibly, so you don't have adequate money to purchase maybe stocks to run the day-to-day business. Then you go for the borrowings. Again, you don't go for the long term, you just go for OD and short term, because it's easy to get at a higher price, and then it's continuously increasing. Then if you take term liabilities, the scenario like loan installment remain unpaid, right? So then අපි කියන්නේ loan arrears තියෙනවා කියලා. OD එක වැඩි, excess එක වැඩි, loan arrears තියෙනවා, bank guarantee claim වෙනවා, check return වෙනවා. Those are some of the symptoms. Equity gradually reducing, even could negative, net worth negative. Why? So it could be eroding because no profits, no retaining earnings, and whatever available could be used to finance some of the liabilities or to absorb the loss in current assets sometimes. So the equity could be impacted. Go to the asset side. In asset side, what happened? Current assets like stocks, debtors, right? So very difficult to collect. Bad debts increasing, ODs increasing, irrecoverable, and then stocks non-moving, deteriorating, depleted. Some symptoms. Then fixed assets, inflated and unrealizable. Maybe building 300, 400 million value sometimes, but nobody to buy. Vehicles, we say it's 10 million, 12 million, like that. You can't sell them at that price, right? Because there is a value for the business, nominal, or what you call recorded, but not the realizable. Because it means that it's not adequate, right, to run the business. Now some problems. Assets there, reported book value is there, but does not add value to generate income. Even you can't sell it at the required level. So probably you have some issues there. Any questions so far? Very important slide. Just see what are those 5. Just go through and see what are those. Account maintained by the client, financial statement, site visit, inspection, discussion with management and the staff, debtor creditor portfolio, informal sources. So now we know what is sick business and symptoms, right? The next step is we need to identify this. That's a requirement, no? Now you grant a credit and you follow up the credit recovery in whatever loan or advances. Fine. Then the importance is, if the client is not going to do well, you should be able to understand, identify it in advance. Then only we have a better chance of addressing the issue, recover the credit, rehabilitate the project. So this identification could be done through a tool called early warning signal, early warning signs. Very important. So these are the 5 sources. What are the sources? And within the particular source, there may be some checklist also. We will discuss in short while. Right? So what are the early warning signs in SIG business unit? These are the 5 early warnings at macro level. Then under each signal, each source, you can see some other, right, where exactly the points that you would do to understand the situation. So now we're trying to understand what are those. Let's take account maintained by client. Here, these are the things that one has to be aware with. When you do day-to-day monitoring, day-to-day follow-up, customer follow-up, these are the things that you should know. Turnover in the account declines or became irregular. So let's say you give a facility, as per the loan agreement, a client has to send the throughput, send the current account, send the business turnover to your account. And if you see a reduction, a continuous reduction, or ad hoc changes, මේ මාසේ නෝ ඊන මාසේ නෑ ඊළඟ මාසේ නෝ ඊළඟ මාසේ අඩු වෙනවා, then it's a triggering point. Why it's happening? Maybe the customer has reduced his business activities, collection issue, or customer is diverting money to another bank. You need to be aware of it. 2, sales purchase are not routed through the accounts, like turnover not routing, right? So he might do sales off the record, like not through proper channels, or purchase without sending the money to the bank, maybe collecting cash by it to get some cash advance or whatever. Third one, frequent inquiries on the accounts, right? Maybe asking some concessions, excesses, right? So bit of some urgent request on the account, or temporary credit facilities, temporary excesses, casual excesses, check returns. Some of the symptoms with respect to current account and the loan account. If you come across some of these signals, means you need to have extra alert on the borrower, client, because further things are going to happen in this nature will have an impact on the recovery follow-up on the credit. Similarly, further symptoms. Payments are not regular now. Payments are being defaulted. Or maybe he's asking for extension of short-term facility, short-term loans. Inability to maintain margins or cash buildups. because as per the loan contract, it's a requirement to maintain cash margin, sinking funds. But now apparently you see it's not happening. So receiving checks to the credit to the account drawn by finance leasing company means that they are in a hurry. They are in urgent need of financing. So that's why they go to a hire purchase company, factoring company, leasing company, right? So those checks are coming, presenting. And then you need to be watchful, right? False assurances. But you see, goalpost is changing, no fulfillment of those promises. So there are 12 things actually we discussed, but at least you should know 4 to 5 points under this item, right? If you are supposed to write a short note on this, yes, at least 4 to 5 points should be sufficient, and then at least you can add something on the particular point, right? Practically you can put example, you can write an example, so if you want to further elaborate. But a 5 marks question, 5 points would do, which is more than enough. So any issues, any clarification, any thoughts from your end? Nothing? Everything is fine? Right. So then we move on. I know, not difficult, but only thing is you need to, keep these things very much in close vicinity, because these things could be tested anytime, right? Okay. Then financial statements. That is important. Now is another source, right? A financial statements, very important, where it again gives you a lot of insights, especially in the project. Now, maybe the client does not have historical financials, but for the project, he could provide management and future financials. So if the client does not submit the required, say, quarterly, biannual, yearly financials, then if the financials are not being audited by the auditors, or the auditors may have given the qualified opinion, change in accounting policy, change of auditors and accountants are critical factors. If you come across, if you observe these things happening, then it's high time to inquire the customer on what basis, right? Why actually the client opt to that sort of activities, actions, any particular reason, right? So you need to understand those things very well. Otherwise, without knowing, probably, so we might allow the client, right, and to operate it, but suddenly there may be a very difficult situation could crop up. So it's very important, especially in terms of quantitative factors like financial information, and to get them timely, to receive them timely, and observe any deteriorating trends. So how we're going to do that is not like historical and existing business. This is a new business. Then you don't have anything to compare, right? So what you could do is you can compare with budgets versus the actual. Because as a forecast, you say in the year 1, year 2, year 3, year 4, this is the projected turnover. This is the projected cost, projected profit, projected cash flows. And you can compare it with actual financials for the post-implementation period. Then if you see a deviation, a bigger deviation, huge deviation, then you can think about and you can see what exactly the scenario here. Okay. So these are some of the, the observations one can see in the balance sheet, right? So you get the balance sheet. Like earlier, we broadly discussed about what are the features, signs in the balance sheet in a SIG business. So this is in detail analysis. Take the balance sheet and see whether you can find this type of things are taken place. Current ratio coming down, quick ratio coming down, inventory turnover coming down, inventory build up, receivable data build up, negative working capital, increasing creditor payment, increasing debts, debt equity, so many things. There are so many ratios. Remember, we have done, ratios like 20-30 ratios. So everything can be checked as against the budget sometimes. If you think that ratios are deteriorating, financial positions are deteriorating, then it's alarming. You need to check why it's happening, to check with the client and what exactly the reasons for this. Okay. So like that, you can continue a lot of things. Balance sheet, right? P&L also. P&L also, you can find a couple of observations. Depreciation not being provided, right? So regular decline in sales. Sales being decline. Fixed assets are not maintained properly. Fluctuation of other income. Decline, profits, increase in losses, that's also would be there. Ever increasing unit cost of production due to ever increasing financial cost. Why? Because you go for short-term borrowings, right? Or maybe higher cost borrowings from finance companies, where you are not supposed to get money from the existing bank because it could be a cost overrun. And then, the cost of the borrowing is going up again, resulting lower margin and lower cash flows. Return earnings could be impact, net worth could be impact. Cascading impact. So P&L is another statement where you can see some information about deteriorating of cash flows, deteriorating of business activity. This is the third one. Very important in terms of one-to-one. First line experience, where you try to visit the factory, visit the project, visit the site, and you discuss with different stakeholders, maybe owners, senior management, operation management, buyers, suppliers. You even maybe peer, competitors, right? So you try to, maybe the competitor one is one of your customers. So you can ask some questions from him about overall industry performance, and then get that information and you compare with a particular project. Is anything to do with the industry, or it is an inherent issue within the project. Like, I mean, those things could be tested through this first line interaction. So when you visit, sometimes you observe these things: comparatively reduced activities, less workers, less inventory, less raw material, reduced number of machines, vehicles, orders, right? Now, maybe when you go the beginning of the year, so you can see ramp of activities, heap of activities. By mid-year, you see a different picture there, right? Where activities are not so great, maybe due to some reasons that you can check why it has come down, why it's not happening like previously. Any issues come across in terms of practical or operational issues, difficulties. Then normal high activity, but loan already not promptly paid. තව එකක් හොඳට වැඩ ටික වෙනවා, right? කිසිම වැරද්දක් නැහැ, වැඩ ටික වෙනවා, but loans pay වෙන්නේ. Maybe you do turnover for credit, right? You do turnover maybe but you're not routing the turnover, right? So there are a number of reasons that you can find thereafter. Then labor turnover. If you see sort of many number of people are moving out, right? And qualified people are not there, experienced people are not there, right? Then it's a like concern for you. Resignation, demise of key staff, less communication, cooperative, right? So not like those days. If you see that things are not happening well in terms of top-down communication or bottom-up communication, and the people they are having some issues, right? Then labor unrest, negative staff attitudes, irregular attendance in board meetings. So again, important areas that you need to be watch. Because when you visit only, you will be getting to know all those areas. We continue. This is about working capital. Debtor, creditor, bills portfolio. Because where you see some issue with the debtor, creditor, bill portfolio, collection, delayed creditor payment, deteriorating of stocks, right? So again, important, because the liquidity efficiency is lies with this debtor, creditor, bill portfolio. If things are not happening as expected, so obviously, so it next in line could be the profitability being impacted. So this is another item that you have to check once you visit the factory, visit the business. So debtor, creditor, bill portfolio. Last one, informal sources. That is again important in several perspectives, where these are not very formal, but informally you get some signal, some information through your friends, through buyer suppliers, through competitors, through social media, through papers, through public, right? So, or maybe a kind of another client who are in the same industry, right? So, I mean, this information may be not very concrete, but it gives you some thinking, further questioning, further inquiring. If you see that some industry trends could be an impact for this factory, this project, right? So like that, you need to understand those as well. That we call informal sources. So what we have been discussing so far is we try to understand the SIG business, right? We know definition, and then we want to identify what are the signals. We call them specifically early warnings. There are 5 early warnings we studied. So under each signal, there may be a sub-signals observation that you can monitor, follow up, capture, identify. So that's what we have been doing so far. So very important in terms of examination. So we have seen some questions come in. I mean, just asking what are the early warning signals and describe 1 or 2 early warning signals. So which have at least 5 marks for each question, right? So that's all about up to here. Any questions? Any questions? Any question that you come across? Right. Now we try to go to causes. Now, earlier actually, we try to understand the features, so signals. So if the things is not doing well, you try to do something and you try to find out the signals like visiting, chatting, collecting, right? But before that, there are some underlying area where some causes of these signals, of this problem, right? Internal and external. Right? Let's say you provide a financing to a client, and now you see the client is not doing well, right? So then how we are going to manage that? And how we are going to understand the particular situation, because causes are very important, right? So it's going to deeper. It's not observation. It's not, the early warnings. Even to happen early warning, there may be underlying reasons. Those are important. Causes of sickness. Why businesses can go to difficult status. That could be happen internal as well as external. Internal, it could be managerial, product, process, financial, and marketing. If you remember right, at the evaluation stage, we were trying to do some feasibilities. right? So there you see some positive, negative. So based on that, you support the credit. The flip side of those evaluation is a risk, right? In other words, say market risk could be lead to some marketing problems here. So there may be a risk on the at the evaluation stage. So based on that, a market could cause the collapse of the project in time to come. ඒක තමයි causes පැත්තෙන් අපි understand කරගන්න බලන්න. So we go one by one. What exactly happened under each area, where internal and external perspective. See, you can understand these things. First read and see what exactly they're talking here. What are those now? See whether you can get idea on the points here. Incompetent management, lack of leadership, lack of delegation of powers, death of key personnel, disagreement among directors, poor industrial relations. So these are, causes where it can lead to a collapse of company management, company, the running of the company operations, that we call managerial, right? So obviously, initially they may be good at, we evaluate them if they are good to run the company. But later, you can see there may be some issues in competency in running that, which could lead to a collapse of the company management. That will show leaving out one or two, discomfort among existing management, so labor problems. Then may causes in the early warnings අපිට පේන්න පටන් ගන්න. The early warnings වලට කලින් situation එක තමයි මේ causes. Because again, this could be important. Just hold on. So basically, now these are a higher level issues, right? Higher level issues taking place in terms of causes where we found that it could lead to collapse of overall management. Okay. Then we move to product. So in a product also, the similar thing could be experienced, right? Where if you have not, selected maybe like not the proper product, or maybe product would be good but competitive market, or cheaper better substitutes, poor quality of raw material, are some of the things that you need to be checked, where initially, yes, so you have done feasibility, you have done some marketing, right? But when on the run, you can see some issues, right? Maybe product may not be, correct in terms of marketing. A product may not be, again, competitive after, other products coming up in the market. So cheaper, better substitutes available. So these are something which is beyond the control sometimes at the original, the inception. But obviously we have some issues. But if these things are happen, then we have a bigger issues in terms of, markets and all those issues in capturing and selling. A process. What is the issues in the process? Where you might have, selected a particular operation, but it may not be maybe viable or maybe not compatible in terms of local environment. Could be an issue. Maybe world-class technology, but not exactly fit to in Sri Lankan context. Right? And then if you take about new inventions subsequently come, then the existing process could be obsolete. For example, so these days we never expected, COVID to have an impact, and then some process went to obsolete, right? That we observed. So it's beyond everybody's control, but it happened, right? Even if you take some tuition classes, for example, now online is now much acceptable. But if the people has so many buildings, infrastructure and all that, and rent income and all that, now they are not getting, because now people are not visiting there. But if we have funded the project to whatever, have a superior sort of thing, but apparently now it's not generating income. Understand? Okay. So then scales of production, economies of scales. Yes, you may be in a position, but later you found with different, people coming and maybe imports coming. So your scales are not adequate, right? So at least to be break even, you need to provide 100,000 or so. But now with the market situation, you are unable to produce that much of numbers. Means you are now losing, because let's say if you want to produce maybe 100,000 or so to be break even and make profitable, but now you are unable to do it due to various reasons. Maybe at the projection level it is not so, but in the operation level, yes, it is so, right? Or maybe machine breakdown, material wastage, labor productivity list. So those things now are coming after starting operations, process related. So means that could cause a damage to your day-to-day operations, turnover, cash flow, loan servicing. Hope you are getting what I mean. Now, at the inception, at the time of evaluation, you may not have this problem. But subsequently, you will see it, and then you need to address it carefully. So management issue, process issue, similar product issue, 3 areas we discussed. Then also financial, right? Financial issues also could create some problems in terms of project financing, in terms of courses, right? Equity now may be low. Yes, you sort of you agree that you bring this much of equity, but later you found that you are unable to bring it, right? Unable to bring it. So then what could happen is, as expected, you can't run the business, right? Then you will tell so many things, like even the bank and all that. So due to disagreements and all that, we are unable to bring the equity as expected. So could be an issue, right? Maybe cost overruns. Initially you say 100 million is the cost, but with various problems, now cost going to 125 million. So then you have to come to bank and get the support. Sometimes it could or it could not. Third one, short-term fund diversion. Instead of working capital financing, you are using that fund to fund the capex, say the operational issues, right? Costing pricing may not be accurate. Maybe initially you say this is the costing level, on top of that this is pricing, but due to some issues, costing wrong, then higher cost, pricing wrong, where you can't get the adequate income. So then, depending on situation, you might go to the outside borrowings, which are costly. Maybe money lenders or maybe finance companies, which is not, not good. A company to survive. Unplanned capital expenditure. So suddenly there may be a capital expenditure requirement. For example, you may be planning that you can run with the national grid. Suddenly with the operations, now you found out the initial the power requirements are not adequate, right? Not adequate. Then you have to install a new transformer, which is additional financing requirements. So if you do have funds, yes, you can do, but if you not, you have to use some funds maybe within the project and do it, may have impact on other operations. So that financially also you will have some issues in running the project. Marketing is another very important area where, in terms of marketing, inadequate marketing setup. So at the planning level, yes, you may say this is what we are doing. This is the advertising. This is the distribution arm. All right, this is like, so everything could be fine. But when you are running the project with outside forces, marketing kind of a thing, probably you might end up with inadequate. The infrastructure based is not enough. Market dominated by giants or multinational. That's another, thing that you could experience later. Too much dependence on a few buyers, like what we discussed in the Porter's 5 forces. So that might cause some problems. Product base may not be sufficient or it is inadequate. Proper distribution channels. Irregular deliveries. Accepting a large order. So these are some of the operational issues. which have impact. Because in the marketing perspective, yes, they might think this is viable and this is good for the company, and so they go and get it. When come to implementation, operationalization, there may be some issues. So overall, you have some impact in terms of marketing. So these are a kind of a very important areas one has to keep in mind, where anytime a project could go bad. We talk about SIG projects. We know what is SIG project, attributes, and balance sheet implication, and early warnings to identify SIG projects. Then we try to understand the causes of the SIG project. ඇයි මෙහෙම සික් එකක් වෙන්නේ? දැන් සික් ප්‍රොජෙක්ට් එකක් වුණා කියලා දැනගන්න රෝග ලක්ෂණ ටික අපි දැනගන්නවා early warnings වලින්. හැබැයි සික් ප්‍රොජෙක්ට් එක වෙන්නේ කොහොමද කියන එක තමයි මේ කතා කරේ internal and external. Internal there are 5. External is even right now we are experiencing. Even these man-made disasters or natural disasters are some causes, right? Industry recessions, technology advancement, change of fashion and consumer taste, input shortages, government tax fiscal like monetary policies, international developments like EU ban or a proposed EU ban, GSP plus ban, proposed GSP plus ban, right? Foreign exchange fluctuation right now we are experiencing. Natural calamities like tsunamis and all that, a man-made sort of thing, even the COVID impact are causes. We never expected these things to become no. So we have planned different things, but right now we see we are unable to deliver, right? Nobody would have expected tourism industry to collapse to this level 4-5 years back. We expect this to double, triple at these ages, right? But now it's totally different. A bank, central bank has to come and being the saviors of this tourism industry. That's the external causes that we are speaking of. Fine. Any questions up to now? Now we try to understand the SIG project or the problem loan management. Yeah, basically it is similar like we do new project evaluation. There again you do several steps and do project evaluation. Similarly, where in problem loan management we try to those things. So maybe prevention, awareness, understanding the problem, determining the objective and strategy, action plan, reporting, follow-up. So similar activities, right? Because now once you give a loan to a client, so it's our responsibility is to recover, follow up a regular basis. So if it is not happening, then we have to devise some plan to recover the exposure, right? Together with the capital and interest, right? For that, yes, we need to take this type of activity. So we will, when we are discussing the rest, so we will have an idea on what exactly we are speaking of, right? So we can, again, for understanding purposes, we can classify. So this is not a hard and fast classification, but in general, depending on the bank's culture and their, the approach, so we can classify, the loans, right? Once you say there are very regular guys performing, when come to the non-performing, or when come to the irregular clients, we can classify them. This is not the central bank, as per the mandated requirement, but you can say who are the early defaulters, who are the difficult clients, who are the doubtful to exposures, dormant exposures, like let's say if the particular client got dead, right? Then it's like dormant, right? So, I mean, you should find some mechanism, but the client is no more, like maybe even disease, like dormant is something that you are not contactable, something. The clients sometimes, disease clients. Under legal action, there are some, cases which is put in under legal action and then you are unable to do anything on that. So under bankruptcy, winding up proceeding. So those are some of the things that, you are in a, situation where for easy monitoring and follow-up cases, you are doing these activities. I mean, these are not exactly relevant for exam, but just for your understanding that I am sharing those. This is important, right? So generally, what I am going to do in case of a problem loan, right? So what exactly you are trying to do? This is a kind of action that generally recovery department is going to do on their day-to-day basis. Determining the loan is a problem, right? First, we need to understand this is a sick problem, sick business, sick project, problem, loan, through courses, through early warnings. So you need to say, yeah, this is a problem situation. Then we need to understand nature and seriousness, right? So what are the causes? What type of the status of the problem? What's the impact of this problem? Let's say you have a 100 million loan now in NPL. It's important to your loan book. And then again, you see that 100 million, and if you don't have any security, the owners are not in the country, right? And then serious problems within the projects, then it's high impact. So like that, you need to understand the nature and the impact of the seriousness. Then analyze the bank's position. The maker NPL ගියාම මොනවද අපිට තියෙන way outs? මොකක්ද අපිට තියෙන impact එක? මොනවද අපේ provision level? මොනවද write off කරන්න වෙන්නේ? So analyze it. Then what are the options? Whether we can restructure, reschedule, rehabilitate, or write off, or to legal action, or maybe finding another investor. So you need to do all those things. Then plan. So what is your plan? Short to medium to long term. So what are you going to do? Initial chat, maybe further financing, strengthening the collateral, talking to investors, increase provisioning, revisit terms and condition, right? So those things that we are talking about, the fourth one. Implement plan and monitor results. So once you understand all those things with the consultation with the client, you offer the revised plans, restructure plans, new terms and condition, and then you monitor. So this is exactly how you do a restructure, how you do a rehabilitation, how do you post follow-up mechanism. So just maybe there is no hard and fast, but good to know this. Like if you approve a new facility, you do different things. Similarly, you try to do an approach. You try to do approach where to handle a problem loan. That's what we discuss here. Again, the same thing going into detail where you analyze. In restructure exercise, you try to do these type of things. So let's discuss, not difficult, but just for understanding. Causes, like earlier we discussed about what are the causes. So causes of the borrower's difficulty. Ek internal vechi deyakda, external vechi deyakda, right? What exactly happened? Marketing problem, management problem, process problem, financial problem, production problem, right? So it is outside the borrower's ability. So good to know those things, right? Then disregard previous data. Now our original forecast and all that is no more valid now, right? Now you have to see about what's the future. Now, no more previously done scenarios are valid, and what could be the future, right? Then obtain up-to-date figures and projection. What's the way forward? Have a client discussion and analyze the environment. What could be the future, right? And then we need to forward thinking. Review documentation, very important. What is that? You need to review now to see whether all legal documentation are in order, all loan agreements are in order, What are the additional collateral or documentation requirements that you need to have to strengthen the bank's position? Or you need to assess the collateral value, reevaluate, get different opinion, and because now the situations are not so good like the previous because it's a problem situation. The viability analysis, whether to run the business as it is or to liquidate the business. What the best option? Maybe you can talk to a client, or sometimes maybe you talk to a client and say that apparently the business may not be happening well, difficult to revive. So why not you sell a property and reduce the exposure? So those are the kind of things that you need to do to analyze a problem loan, understand the problem loan, to get more insights of the problem loan. Because without doing this, unable to offer solutions, whatever restructure, rehabilitation, or whatever there are, you can name it, but the problem is you need to understand the situation, analyze the situation, analyze the loan. So then only you can do a proper job in terms of analyzing, in terms of understanding, in terms of offering solutions. Then we talk about a seriousness sometime earlier. So this is the seriousness of the problem. How are you going to understand the seriousness? Seriousness could be higher or lower depending on documents are defective. Offer letter, agreements, there are some issues, pending documentation, documents are missing, not complete, issues. Evaluation of the credit is not so great. It's not up to the standard. Poor credit evaluation. Uncooperative, dishonest borrower. There are willful defaulters, willfully not paying. Then situation's critical. They have the capability, they have means, but they are not cooperating enough. They are not supporting. They are not paying. Then, we are in a difficult wicket. Mistakes, carelessness of the bank. So there may be some, obvious issues, problems, mistakes done our part, which put us in a difficult situation to recover the particular credit. So if those things are there, then it's serious, right? Then sometimes you need to provide more additionally, right? Right now, if everything is fine, then the seriousness, impact of the credit, bad credit could be lower. But if these things are there, possibly you need to have higher provision. There's a limited chance to revive the project. Okay, limited chance to bring a new investor there because the problems are there. Whoever who has done it, but seriousness is critical. Then you need to take early actions than waiting longer. Okay. This is some of the things that you can do. We talk about remedial solutions, recovery, follow-up, restructure, rehabilitation, right? So what are the things you could do? These are the things. If you understand the seriousness, if you understand the problem loan, if you understand the causes, if we analyze the situation, then we can, offer them different solutions. Again, important. What are the things we can do? More frequent, higher quality customer contact, right? So always you maintain a good relationship with the client, with the performing or non-performing. That helps you a lot to, win the customer, get his consent, do something in concurrence, easy negotiations, reorganization, management change. That's another option. So sometimes you can bring a new management here, introduce a new management, introduce qualified 1 or 2 individuals there, or maybe you can hand over the management to something totally different with the concurrence. So, or maybe changes in the structure, reduction in some of the staff, managing cost. So those are things that we can look into. Downsizing. Maybe initially you plan to go maybe through several segments, markets, or maybe different production processes, different products. Now you may have thought otherwise. Downsizing and revisit the reduced operations. Additional financial support, another one. Not only from the bank, but other sources, maybe friends, relatives, third parties, investors, suppliers. There may be chances, right? So they may be interested. So you can, intervene and do those things. So sell collateral. That's another option. Maybe a couple of collaterals may not, everything could be required. Everything could be required, right? So you can sell some of those things. That could be useful to reduce the exposure. Or maybe non-earning assets. There may be some, taken as collateral, couple of vehicles, but not everything is required to run the operations. So that what you can do is you can sell some of these things and reduce the exposure, because now we are in a difficult situation. Additional collateral. Sometimes we are in a position to get additional collateral to strengthen the bank's position. Renegotiate terms. Maybe price into other terms and conditions. You can renegotiate. It may be necessary. Renegotiate. Seek support from the government agencies. Sometimes there may be a support coming from ministries, departments, through credit lines. There may be chances. So you can get their support. Or maybe marketing support, or maybe export related support, right? You can get that, give it to these people. So like that, there may be so many remedial measures. Again, important. What are the things we could do when client is in sick, a business is in sick, a project is in sick, in a bad shape? You can do these type of things to bring the customer to a comfortable level, acceptable level. Okay. Any questions? I know that these things are not difficult, but it's good to understand, and sometimes in case if the examiner asks some 1 or 2 questions, that you should be able to understand, right? So again, a more formal way, we try to understand something like financial restructuring. Like when you provide those solutions, it could be a part of this financial restructuring, right? So because without that also you can do something like introduce a buyer, introduce an investor. May not be you are trying to do financial restructuring, but other than that, you can offer those things as well. So when it comes to the financial restructuring, it is again like more formally we offer solution. It could be restructure, reschedulement, rehabilitation, right? In technical we say reschedule is something you change the repayment plan, repayment terms, a tenor actually. When say restructure, not only tenor, all other terms we call restructure. But in Sri Lankan context, we are not exactly differentiating restructure, rescheduling. Everything we call reschedulements. Rehabilitation is something beyond restructure and reschedulement. We try to offer other solutions like finding a buyer, investor, seller buyer connection, right? More non-financial instructions, right? So I mean a complete solution, not only financial and otherwise, right? But don't worry too much on this technical jargon, but you can think about the financial solution. Either it could be rehabilitation, restructure, reschedulement, or combination of those things to revamp the operation, revive the customer, right? Some of the things under the rehabilitation, which is a combined impact of everything, further advance from lenders, interest deferments, interest concessions, ease of restrictive covenants, freeze on further payments, right? So sometimes you can say you freeze the payments and you will ask them to pay. Conversion of interest and principal into equity, outright concession of principal. So those are some of the things that we need to understand under the rehabilitation exercise, right? So depending on the problem faced by the client, you have to offer solutions to revive the business, right? It could be terms as this restructure, reschedulement, right, or rehabilitation, but a solution should be enough to a client to, you know, bounce back and do operations, maybe at reduced level, scale down, but still it's a kind of a support that you are planning to give to come out of the situation. So any questions? Then some of those activities that we can think about is something maybe under those exercises. Divestitures. What is divest? Something where we'll ask client to sell part of the business, right? So then at least you are with the part of the business with some liabilities. So by doing so, what happens is your exposure could come down. Or plant closing, closure of plant. There are several maybe plants operating or several production lines. So since you don't have adequate capacity, you close down some and operate with lower scale. Lay off staff. Sometimes you need to do that also. Consolidation of the operations. Marketing, and maybe you have done it several places. Now only single marketing. Single supply or the buyer maybe office, purchasing done at single. Maybe centralized production. Because it saves a lot of time, effort, cost. New marketing strategies. So sometimes you do through distributors earlier, and now it could be through outsource, or maybe centralized marketing, or maybe you done through different marketing agencies. You will change those things. Change the organization. Management issues could be addressed. Those are, we talk about, you know, under the restructure, strategic level. You talk to senior management. It's strategically you do, maybe changing ownership sometimes. So these are kind of things that you can take not only operational level, at a highest level. It has a bigger impact on the company and its operation. Right. These things I'm not going to go into detail. Yes, you can just read through. This will have, because, yeah, I'll touch upon this one, because if everything is not going to work, we talk about, you know, restructure, reschedulement, rehabilitation, everything is fine. But if those things are not worked out, then we need to go to legal action, which is very difficult in terms of relationship. But as a bank, because we are in the interest of depositors money, then we need to go to legal action to recover these exposures, right? So parate is kind of a very useful legal provision available where the facilities is above 5 million. The security is owned by the the promoter. If the facility is NPL, then we can go for legal action under the parate. So board approved resolution will proceed us with the parate. That's the most easiest method of taking legal action. Requirements are loan amount should be or exposure should be above 5 million. Facility should be non-performing category. The security offered should be owned by the promoters, not the third party. Those are the three requirements under the parate. Failing which, you can go debt recovery under 2X, right? So if the client offered a third party property or maybe other forms of collateral, so you can go with the debt recovery. So these are some of the things, in case of legal options, maybe repossessions, season, sale, bankruptcy, winding up. So again, depending on the situation, then you have to go through that channel. Let's say if everything is not forthcoming, then you have to go to winding up or liquidate option. Or if the client is in a bankruptcy, then you have to accept the fact and then see what is available in terms of personal assets. Or under the parate or debt recovery, then you have to go to seizure and sale. Sometimes, like if it is a leasing kind of thing, sometimes seize and you can do those things. Or maybe under the auctioning, you can repossess because earlier it's under mortgage. After parate or legal action, you can acquire the property and then you can sell and reduce the exposure. So there are several legal options available. We need to go to that detail, but you need to understand what is parate, what are the requirements for the parate, and what are the other legal actions, rights, legal action methods available for us to proceed in case if we are unable to recover the exposures, right? So I'm planning to stop at that point. There are some things that you can read the presentation as well as the reading material I have given. So generally, what I have to tell you is now almost actually we have covered a sizable theory component during the last, I think, 4 months, July, August, September, and we are in October. And then the rest of the days, what I am planning to do is some related to revisioning, where we try to capture, select several questions relating to throughout the syllabus and discussed. And also, like as Rachini suggested, I presume, Sachini, then we try to do some MCQs also, so that you can get overall syllabus idea. So I think we have 3 more days to go, maybe next week and the end of the last day of this month and the 7th November. So I think during that period, we'll be able to discuss a sizable cross-section of the past paper questions. That's what I'm planning to do. And since I have given all reading materials and the presentations and the relevant topics that you can start going through presentation and those things during, next 1 to 2 months. And what I suggest is, like since that we have done almost everything, start doing past paper questions. So you can maybe take in 2014 to right now and you can cluster the past papers questions, like say, what are the project finance questions? What are the SME financing? What is the microfinancing? What is the refinancing area? So what is the NPV questions, right? What is the break-even question? What is the working capital question? What is the financial state? Like that, so you can cluster. So from 2014 up until 2020, I think we have maybe 12 or more papers, right? So you can get all the papers because it's now available free. Then cluster it and attempt the particular cluster. Do all question, read answer, read the suggested answer, read the question, and get an idea. So 1 or 2 questions you can start writing, not all questions to be written. Maybe out of say 6-7 questions in a cluster, take 2 questions and you do it your own. Prior to that, you can say read the question, read the answer, get an idea what exactly suggested answer is, how to write a point form answer. Then select 2 questions out of that and do particular, so then you can be a master. So like that, when you select and cluster and maybe 6 or 7 areas, so possibly you are there with 80 to 85% could be covered. So then the rest is coming from maybe so different areas, so which we can't predict. But if you are done with this 80 to 85% coverage through the past papers and all, right? Any questions, any suggestions, any feedback from you? No questions? Okay. Then what we are going to do is like we will wind it up for today. And thank you very much for joining me. So next week, so we will try to do past paper questions. And I think I have already basically, so I will share the content next week so that you can see what exactly we are going to do. And then as I suggested, so start doing past papers, attending past papers. So if you do have any questions, also you can bring it when we are doing the selected area, so that I can have extra effort or extra kind of explanation if you do have any doubts on the particular areas. So that's it from my end, and thank you so much for again participating, and have a nice and safe week ahead. Take care.